Right guys, very slight delay for the start. Right, we are up and running. Afternoon stream then. What we're going to do, as always, little look at where the performance has come this morning, what is potential for the rest of the day, and sort of where much of the focus is going to be. What we've just seen, so literally just before I stepped onto the screen, which is right, I took a little moment just there, was Canadian CPI, and a few traders sort of trading the Canadian bonds on it. Most people sort of having a go at the long end US bonds on that, which follows much of the theme of the day. Performance-wise so far, not seeing a great deal. This big jump in performance here comes in two parts. Partly, it's quite well skewed by one of the traders holding a Bund versus T-note trade overnight. So up in the Bund, down in the T-note, which is what's gone on just there. And that was then the closing of that position. But there was some performance in the Bund early on in the morning on the UK CPI. Bear in mind, gilts are shut. So with gilt shut until 8 AM, the UK data is not tradable in the bond market unless you're going to go to the Bunds. So that's where everybody goes. People going Bunds, and that's where the trade is. So that's what the performance has all been about. Majority of trade today now going back to more normality. Bund, big feature, S&P, gold, NASDAQ. That's a little bit more common. Remember yesterday, or sorry, not yesterday, Monday, a lot of the focus is on cable and gilt. That much less so today, even though you've had UK CPI, the story in those markets is perhaps diminishing. Interestingly, I'll talk about this at the end, but later on today, there is a lot of Bank of England members speaking about the exchange rate mechanism from 1992 and what happened when the UK left that. Almost as a kind of, we've seen the shake up in bond markets and the currency markets, let's go and review what happened last time. It's almost an admission of creating a similar type scenario. So that's the most important. As you can see, bar one big trade here and here, reasonably flat across the board. It's flat to down at the moment. Yeah, the majority of traders are perhaps slightly down on the day, not massively, nothing that couldn't be recovered. But in the sequence of the day, if that's your zero line, we are now moving away from this. This performance really, if you take that early trade out, is sort of flatlined and is now slightly deviated to the downside. But I wouldn't be surprised, cumulative, to see this back up by the end of the day. Remember the US sessions where you're going to get that little bit more action. So let me go back one. Little look at where bonds, or not bonds, markets are right now. Long bonds are what's really guiding the moves. So if you go and looking at the US curve, the 30-year is down the furthest and breaking lows, followed by the 10, then the 3, then the 2. So we're seeing that play come in. That is steepening the curve. This is ultimately not necessarily that bad a news and indicating that things are looking all right. However, it's a steepening curve on the basis of increased inflation, and then also you're still seeing rates rising along with it. This is producing a decent bit of dollar strength. That's the main take from this. The bond weakness is creating dollar strength, is having a negative impact on gold. Gold's the one that's getting hit the hardest here. Gold has traded down all day. We'll go and look at gold in just a moment. Whereas what you need to be thinking about with other markets is how much further have they actually gone from yesterday? Because the S&P's down overnight as well. So everything's correlating to the downside. It's the degree to which they're correlating which is important. Gold, clearly through yesterday's low, through previous day's lows. You look at the euro, now that is also through yesterday's low. T-note through yesterday's low, previous lows, CPI lows, the only thing left. The S&P, not down to yesterday's low yet. So this is clearly showing that, the equities are dropping a little bit, but they're dropping not in the same sort of ferocious way, in which case, what this would suggest to me here, and what I'm thinking about, is any stabilisation in the dollar-based markets could then allow for the bounce in the equities. Ultimately, the equities are strong since CPI. There's your CPI move. Equity is very strong. Does that mean now that if we get stabilization here, the equities then can get the move to the upside? So let's go and take in a little bit more detail about a few of these markets, starting off with the bund. We'll start with the Europeans. Where have they got to? What potential have they got? What I would say for the European markets is they've hardly convinced us of too much, I think is perhaps the best way to put it. You look at the bund, look at the profile on here, there's no clear directional move. Of course, we've opened, traded down. That was on the UK CPI data. So that's got us outside of value. But have we progressed from there? No. All the time, keeps coming back towards value, just inside the IB. We're struggling to break yesterday's low and previous lows over here. So this is a market that, whilst it is tilted to the downside, you take away that initial drop, and really we're just balancing at the bottom of yesterday's range. We are, however, at quite a key decision point. And this is where you need to think about how the market plays out from here. Because whilst we're at this key decision point, and you can see this is your range formed over the last sort of 5, 6, 7 days, basically 135.88 to 137.58, there's your range. That's where we potentially could see a break, and the break then goes down to attack this kind of double bottom, 2 rejection candles that we had on CPI and the day before CPI. So there's potential. But what you need to see is a change. The way the bund is currently trading is not offering a great deal of opportunity. It simply is struggling every time you get down here. So something needs to give. This is not just going to fall out of the sky on its own. It's not going to get on with this move on its own. In which case, we need something different. Otherwise, it feels a bit like Monday that European markets had set their stall out and they don't really fancy much. There is news coming up later, potentially that can do something, but at the moment it's looking normal variation type day. I'd be unconvinced of a move down until we can actually start to set some continuation pattern up down here. Want to see some single prints basically. So, limited for the bund. Don't discount as well the possibility of the amount of time we failed to go anywhere down here. If you see any bounce back in the US bonds, could the bund then do similar to what it did yesterday, drops down the range and then reverses the entire range. So don't discount that as a possibility. But the downside looking like a bit of a struggle. Eurostoxx. This has not gone down with the US equities in quite the same way. We have basically traded inside of value. And that is all we've done. I don't think that's a massive shocker. We had a very balanced day yesterday and we open inside value. Are you surprised that we've then stayed inside value? No, you wouldn't be. There's still opportunity here. Partly because of where the Eurostoxx is. This is your daily chart down here. Big notable point, double bottom down at 32.55. This is your confirmation point of the double bottom. Basically the highs of today. These highs just here, we've just traded above them today and not managed to stay up there. So 34.89, that's your key zone. If you can get above that, it breaks the double bottom, it breaks the recent downtrend that has been coming from the middle of July, middle of July, breaks that, and that then provides an opportunity up towards 3,700. I wouldn't expect that today, but it opens that change of direction up. That's significant, because when direction changes, now you can be biased to the upside. Whereas at the moment, we're still in this will it go up, will it go down phase. Once it gets up here, basically above 3,500, now you can assume it will go up for the next 200 ticks. So it's about thinking about the type of move that's available. We're on a balanced day, so first thing, I don't expect a great deal, but this can change. So you've got to ask, how is it going to change? If it goes to the upside, you're looking for trend. You're looking for it to get up here and then stage a trending type move. Keep the buying coming on the back of the rally that we've got from the CPI. To the downside, because of this gap up that you get here, and the holding of 34.54, this level just here, basically these lows from yesterday, the highs from the previous day, this could create a quick liquidation down. And what's key to that then is this very prominent VPOC. Is it a liquidation and bounce, or is it a liquidation and continuation? That's what you're looking to answer for Eurostoxx. So those trades are available, but the overriding feel is that the balance day does not imply that these are likely. Right, onwards to the S&P. Similar type story. The thing I'm interested in with the S&P is the question of, do we repeat what we did yesterday? Yesterday was a day where overnight we gap up, grind higher, absolute classic overnight position in reversal trade, fails to break the overnight high at the cash open. Excuse me. That provides you an opportunity to sell, and the market drops the entirety of the range and goes and closes the gap. Absolute textbook overnight reversal trade. I hope people were looking at it. I hope people traded it. Since then, though, we have had Netflix earnings, seemingly pretty good, and that does provide us a little bit of a bid into the end of the session. We don't hold it up. So it's a similar type story now. Overnight, we basically just done a counter move to the end of yesterday's trade in the S&P. So you have to ask yourself then, what are the implications? Is this a counter move of the Netflix story and basically just taking us back to where the S&P was trading pre-Netflix, in which case neutral, nothing more comes of it? Or is this an overnight rollback and the opportunity now to play to the upside, to reverse this positioning? Now, what you're going to be able to, or the way you're going to find this out, I should say, is going to be what happens when you get down here. 3,700. We could see a similar thing to yesterday, fail down and back up. The difference between today and yesterday is that this is not getting us outside of yesterday's range. But nevertheless, a failure to go down here, basically creating a similar move to Eurostoxx, means that we don't really have the impetus from sellers, and you can then reverse back up. If it does break, i.e. basically means that Netflix is ignored and the overnight move is the real move to take us back to where we were, then you can look for the sweep of this small range, which is this little bit here, and looking down towards value, which was left much lower over here. So there is space in either direction. I'd be very interested then in what happens around 3,700 to make your decision. If you're going to be selling it, realistically, you probably need to see it get below 3,700 to be sure that this is not going to be an overnight positioning trade, reversal trade. Once below, then you can play down. Reversal trade, you need it to fail to go through 37, bounce back, and then you've got that move back towards the upside. Right, the other area, still a lot of traders not very focused on gold, and gold's produced at least two recently really nice, crisp inside daybreak trades. Breaks the inside day. One of them was, I'm trying to find it now. Well, today was one of them. And then we also had another one going into CPI. There's another inside day going into CPI, and that gives you a significant break. We've had another one up here, and that gives you a pretty clean break. These inside daybreak trades in gold are working rather nicely. We've also now got a trendy looking market. This is the only one that looks genuinely trendy. All of the rest of them have moved down, but not in a trend type fashion. Gold has. So gold is on the way down. As long as you're not filling the single prints, gold remains bearish looking. And the key level now for gold is down here. These are your last two reference points, 32 and 22. VPOC from this reversal day and the low. If we get through 32, you can assume 22 trades. If we get through 22, the space opens up towards the downside. So gold has got the scope. It's already showing signs of direction. Very clear trend already. This looks good. You know, this is the one where if you're wondering whether there's any direction, gold's probably the one market you can say confidently there is. Just bear in mind, don't get married to one idea. It could reverse, And the key bit up to judge the reversal is these single prints just here, getting back above 1645, and that negates the move. 1645, 1649, then the move is over in gold. So don't get married to it, but it does show more scope for movement than some of the other markets today. It's a decent looking trend as well. It's not getting overly stretched. That's positive. Positive for people looking to sell with the trend. Right, afternoon expectations. A lot of the focus now is going to be on central bank speakers. Like I said, ERM discussion from both ECB and Bank of England members. We then also have a number of Fed speakers later, Kashkari and Bullard, and Biden's energy speech. What's he going to say around energy security? This is likely to relate to the SPR releases we've seen recently and their intent to replenish the SPR once oil prices start to drop. How's he going to do it? What's his future plan on this? Are there going to be further releases of SPR? That's the stuff that we want to find out. So Biden's speech is perhaps going to be the big focus. Market focus, it still remains bonds. Every time I look over at risk, most people are in bond markets, still predominantly playing moves towards the downside more so than anything else. Right, I will wrap it up there, guys. I'll leave you with the trading floors. Let's see what some of those guys are up to. But on the whole, it's a day where expectations are now perhaps a little bit diminished. I don't think anybody's expecting to have any kind of, groundbreaking day today. The movements that we're seeing so far are not indicative of that type of opportunity. We don't have any ongoing story that is likely to change it either. So it is a day where, you manage your expectations. This can still be a reasonable day for you, but not likely to be any kind of spectacular day for many of the traders today. So focus on bonds. Be interesting now to see if we do start seeing more people trading gold. It's a market that is very much, down the pecking order of favorite markets for traders this year. 2021, it was a big market. 2020, 2021, everybody traded gold. Now it's very much sort of fallen off the radar. We shall see if it comes back, particularly as it starts to get more clear from a technical perspective. Right, I'll wrap it up there, guys. Have a great rest of your day. I will see you all next Monday. Catch you then.